Phil Orlando is Chief Equity Market Strategist at Federated Investors, which has $409 billion in assets, and he joins us now with his reaction to today's testimony. First of all, thank you for your patience and hanging in there.
Thanks for having me back.
What did you think overall of the testimony?
Yeah, frankly disappointed. I mean, with the benefit of 9 months of hindsight, we can look back at the events of last September, October, November, and say, okay, look, maybe there were some things we should have done a little differently. The reality is, though, that Bernanke recognized the situation, acted boldly, acted confidently, and helped navigate us out of this mess. And I think, frankly, there should have been a greater sense of appreciation and respect for the chairman's role in rescuing us from that situation rather than what we saw today.
Well, what about those concerns that a lot of the lawmakers had about Mr. Lewis, some of them suggesting that he used the threat of imposing a MAC, instituting a MAC, as a bargaining chip just to gain more leverage with the Fed?
Well, certainly I wasn't there. I don't know what the conversations were between Bernanke, Paulson, Lewis, et cetera. But I think the point that the chairman was trying to make is, with regard to the MAC clause, the material adverse change clause, is that you can't just wave a red flag and say, okay, we're going to invoke MAC, the deal is off. There are a certain level of legal hurdles that need to be achieved. So if Lewis were to raise the question of MAC and was not able to achieve those legal hurdles, then that was going to create a lack of confidence in the deal, in Merrill Lynch, in Bank of America, and that theoretically was going to create a greater risk to the systemic meltdown of the global financial system. So I think Bernanke and Paulson were right in trying to make that point clear, and perhaps there was some miscommunication in exactly what everyone was making.
But the concern, at least from where I sit, the concern that the lawmakers had was there should have been any miscommunication. There were a lot of moving parts, to be sure, but this was a critical deal between Bank of America and Merrill, and that somebody should have been... there should have been more oversight. There should have been more checks and balances. Who's responsible for that?
Ultimately, I'm not sure. I think certainly from a corporate standpoint, Ken Lewis, John Thain, and their boards of directors need to maintain some responsibility here, and the Fed and Treasury and the Bush administration needed to exercise better oversight here, and things were moving so quickly, the stakes were so high that it appears that there was just some miscommunication in terms of what the proper course of actions were and what the consequences were if the proper course was not taken.
Vera asked you about your reaction to the testimony. You said maybe there should have been a greater appreciation for Mr. Bernanke. How do you think he came out of this? And I mean that going forward because there's been some talk, well, the president hasn't given him an open-ended endorsement if he were to get a second term as Fed chairman. He says, well, I'd like the job that he's doing. How do you think he did today?
I think Bernanke did a terrific job today, and I thought that Representative Kaczorski from Pennsylvania was able to put the entire proceedings in the correct perspective. Looking forward to next January, February, Chairman Bernanke's term as Fed chairman expires at the end of January. I think at this point, his reappointment, unfortunately, is probably no better than a coin flip. And that disappoints me because I think he has done a very credible job here, and I think the markets would like to see President Obama reappoint Chairman Bernanke to a second term as the Fed chair.
Phil Orlando of Federated Investors, thank you so much for hanging in. It was interesting. Marcy Kaptur, the Democrat from Ohio, she thanked Bernanke for his endurance, and we thank you for yours as well.
Thank you very much.